I've got a very serious one right now. This is coming directly from Zoltan Pulsar, and if you don't know who he is, he's basically the number one go-to guy when you talk about repo operations, reverse repos, and so on. So he now works with Credit Suisse. He previously worked at the desk being the New York Fed, where they actually do the repo operations. And this is directly from him, his own words, May 25th, 2021, brand new information. He had this to say, and by the way, try to find this information elsewhere on the internet. Okay, I've got the link in the description if you want to see it, but I'm going to read this to you. Normally, I wouldn't do something like this where I actually read it word for word, but understand everything as it relates to this coming from the guy himself. Try to find another channel that's going to actually dig up the document directly from the source itself. This is Credit Suisse's own website I pulled this from, okay? Global Money Dispatch. I'll try to zoom in a little bit if I can. There is the QE problem, the Wells Fargo problem, and the taper problem. The QE problem has to do with the Fed buying way too many mortgages, richening MBS relative to treasuries. The Fed is buying 40 billion of MBS a month, and Bank of America is providing a tailwind by buying as many MBS as the Fed. I was unaware of that, by the way. What will fix the issue is either the Fed buying less mortgage-backed securities and more treasuries, or Bank of America doing the same, the Fed for market functioning reasons, and the Bank of America for relative value reasons. Either way, fixing the QE problem will require one of these banks to buy more treasuries before taper commences. And taper, of course, being the talk of the town this year, because they're suggesting, many people have suggested that in 2021, taper is going to start, and the markets are not going to like that. But he had something to say regarding it. If you are concerned about the mortgage-backed security flow, the last thing you need is the Fed suddenly lifting Wells Fargo's asset growth ban. Wells Fargo had an unused balance sheet capacity of more than $500 billion, and after years of no growth and a shrinking loan book, it would be stepping into duration markets with force. If the QE problem is bad enough for mortgage-backed securities and leads to a bid for treasuries, the QE problem plus freeing Wells Fargo now would mean mortgage-backed security trading even richer, and by extension, an even stronger bid for treasuries. Timing is everything, and getting it right can turn a problem into an opportunity. So we'll see, okay? Look, I'm trying not to rant on about it. I really want to read this to you. I know this is not a normal video, but check it out. While lifting Wells Fargo's asset growth ban now would do more harm than good, it could come in handy when the Fed commences taper later this year or next. The market assumes that taper will lead to a sell-off in rates. As I talked about, actually, you'll see it in the morning time, probably by the time you see this video, the one after this one. Like in the past, but that need not be the case. The Fed could announce its plans to taper while at the same time announcing the end of Wells Fargo asset growth ban, so that fewer purchases by the Fed will be offset by more purchases by Wells. You see that? So right now, they've got this ban in place, and maybe the Fed can do a little switcheroo. We'll see. Indiana Jones coming in here for the swap. Less buying by the Fed and more buying by Wells Fargo. And rates don't have to sell off provided there is coordination at the Fed. The monetary and regulatory arms of the Fed typically do not coordinate, but never say never. Using the Wells Fargo option could help the Fed make taper a smoother affair than the 2013 experience, about the taper tantrum, which wasn't smooth to begin with. It's one thing to taper against a boring fiscal backdrop like during 2013, and another to taper against a backdrop painted with, I'm not going to bother pronouncing that word, of fiscal issuance. Given the fiscal outlook, the Fed could be creative with the Wells Fargo option. Then there is the consensus problem, which is that everyone expects it to go up from here. And if everyone is thinking alike, then somebody isn't thinking. Isn't that the way it works? Isn't that so funny how consensus works? The macro reasons for higher rates make sense, but the potential for more treasury purchases by the Fed or banks before taper commences and Wells Fargo deploying $500 billion of balance sheet after taper commences could set off a rates rally from here. Consider these problems at least as risks. Who knows? Okay, so that's the end of it. I just want to bring that to you directly from the man himself. Don't take my word for it. Don't take Jerome Powell's word for it or any of the, unfortunately, it's becoming quite bad, alternative media out there where people with millions of subscribers just really steering people in the wrong direction. We need to know what's going on. I hope this was of some value to you, and that's all. Take care.